Of all working Americans say they don't feel financially prepared for retirement. That was supposed to be. A new survey from Bankrate.com shows 55% of Americans feel they are behind on their retirement saving. Count me as part of them. In order to help alleviate that, we're bringing in Melissa Armo. She's the Chief Executive Officer at Swoosh, an educational firm teaching people how to become profitable traders. And she's in New York for us this morning. Good morning, Melissa. Thanks for joining us.
Good morning. Thanks for having me.
So high inflation is prompting a lot of workers to put their retirement savings on the back burner, and those that they do have probably been decimated over the last year or year and a half by some really bad stock market situations. So what can folks do now to help themselves get back on track?
Well, I think it's really important for people to live in the present moment, because what people don't want to do is get behind in their bills because they're worried about the future. So if people really feel like they cannot contribute as much right now, 2022, we're going into 2023, as they would have previously to their 401k, that's okay. If you're under the age of 40, you really have plenty of time to catch up. If you're over the age of 50 and you're worried about it, I would give yourself a time frame. Even if you want to cut back on your contributions, maybe reevaluate in 6 months. I think the economy and inflation, and including the market, could still be in a downturn here until maybe after the next presidential election. So we're talking 2 years out. So I think it's important for people to understand, while they may have to change their spending habits right now and saving habits right now in the next 12 to 24 months, they have time to recover, because the fact is the market has taken a tumble. And if you're ready to invest at some point, not right now, because I still think the market's lower. In fact, we're lower this morning right now. At some point, you may make up the ground. So it may feel like you're not on track, but if the market has a rally come 2025 or even 2026, and I know this sounds like a long time off, but the fact is the market could really race back up to the highs in a couple of years from now, and then you'll make up the ground if you invest.
Well, that's what folks are worried about, right? They've lost a bunch of money in recent months, and they're worried that they might miss the correction, that eventually the stock market's going to go back up and they're going to miss out on it. But you're saying that you're telling folks keep your money out of the market for at least another 2 years. Is that right?
Well, I mean, as far as adding new positions, if you're ready in the market and you didn't get out at the highs earlier this year in January, even February was the market we really sold off hard. If you didn't get out up there, I'd say try to ride it out as best that you can. You know, a lot of people, even in retirement nowadays, because people are living such long lives, which is fantastic, they're taking part-time jobs in retirement to stay active and stay healthy for extra money too. So I wouldn't try to plan everything. It's impossible to plan everything in the future. The problem with the market right now and taking new positions right now is we still have the Russia-Ukraine conflict that's hanging out there. And again, we have the midterms coming up shortly. There's just too many things out there that are going on that could affect the market catastrophically, I might add. We could go all the way back down to where we were at the beginning of 2020. And again, even though we've taken a tumble, that's a long way away too. And then people will feel the pain of that as well. We had a good rally from 2016 up until 2020, and even in 2021 was a bullish year. So while people feel like they lost money, again, the gains weren't really realized if they were in the retirement accounts, because they really couldn't take out the money anyways if they weren't over the age of 65. So people, if they invested way back, you know, I'm talking 6, 7, 8 years ago, they're really still up from there. We haven't gone back down anywhere near where we were in 2016, 2017. It's just that 2021 was a bullish year. But the backdrop of the economy is such that right now that, you know, they're going to continue to raise rates. I mean, mortgage rates, I looked the other day, are over 8%, which is crazy when you think about it, because 12 months ago, they were 4%.
I think I'm going to flee to safety and I'm going to invest in some treasury bonds, but that's just me.